good evening, guys. Um, I want to say a big thank you to every single person who has actually subscribed to my channel. First of all, let me introduce myself. This is Analysis King. This is Analysis King. If you're actually new to my channel, I actually um, I will kindly ask if you subscribe to the channel, right? Subscribe to the channel, hit the notifications button to actually know when I actually post a video, and also like and comment on the videos, right? The like and the comment on the videos makes me it gives me more encouragement to actually post more videos, right? To actually post more videos. Try as much as possible to make the comment section a little bit engaging, right? So if the videos are good, tell me. If the videos are not good, then you actually give me also give me a feedback, right? If it's not good. So please do well to subscribe. Please do well to turn on your notification buttons, and please do well to like and comment. If you actually want to join my free Telegram group, and if you want to join my mentorship, the link of my Telegram group would be in the description below. So you can contact me to join my mentorship through my Telegram group, right? The link will be in the description below, right? So let's get into the class for today. Into today's class, we're actually going to talk about mitigation, right? Mitigation is actually one of the popular things that actually is being said in the market, right? So we have uh, um, we have the mitigations, we have the order blocks, right? So these are the two factors. These are the two factors that are actually being said mostly in the market, right? So let's go into how mitigations or mitigation blocks are actually being formed, right? So because that is actually what the video is all about. We want to learn, right? Want to learn. I'm actually giving you a sneak peek of what my mentorship is all about, right? So this is just a sneak peek of what my mentorship is all about. So I'm actually giving you this particular information, right? But I'm not going to teach you how to enter, because that would be an offense to my mentor, my students in my team. But I'm actually going to just be showing you how it is being formed, right? So let's go to the whiteboard and let's explain how it is being formed, right? So let me stop share this. All right, all right. So first of all, you want to understand what mitigations are. Mitigation blocks are formed when there is a when a higher high or a higher low refuse to continue, right? A mitigation block is formed when a failed higher high, or when price refuse to break a higher high, or price refuse to break a lower low, right? So this is how a mitigation block is being formed. That's the simplest definition, right? Simplest definition of a mitigation block is when price refuse to break a higher high, or when price refuse to break a lower low, right? Now, this is how mitigation blocks are being formed, right? You can actually see, then definitely I'm actually going to give you the criteria that you actually need to see for a good mitigation block, right? We actually see from this drawing that price is actually in an uptrend, right? Because price is creating a series of higher highs and higher lows, right? Price is creating a series of higher highs. This is the first high, this is the second high, right? Sorry. Right. So this is the second high, this is the third, this is the third high. Now, price make the last leg. Now, this was the last push, right? This was the last push that broke structure, right? This was the last push that broke structure for a continuation. Now, price made the last high, made another high, right? This was basically the high that price actually made, the new high, which was this. Now, instead of price to break this particular high, instead of price to break this particular high, price couldn't break this high, price couldn't break this particular high. Instead, price broke the low, right? Instead, price broke the low. Now, Since price has broken the low, the first thing that comes to your mind is there is now a trend, a change in trend, right? That means the trend has actually changed. Now, at this particular point, at the last high, which was actually formed, which is this region here, the last high, sorry, the last high, which is this region here, the last bullish candle before this drop is what we call a mitigation block, right? The last bullish candle before this drop commences, right, is what we call a mitigation block, right? And you actually see that they actually broke the low that was formed, right? Instead of them to break the high, they broke the low, formed a mitigation block, right? Now, the mitigation block is the last bullish candle. The last bullish candle before this drop is actually called the mitigation block, right? Now, all price will now do is price will move into that mitigation block, right? Price will come back to fill, or the smart money will come back to fill their orders, taking out this high, right? Taking out this high, because originally this high was not created for this high was not created for like an order block, right? Because we have different types of order blocks. We have order blocks that we have a valid order block, and we have an invalid order block. Because a particular zone is created like this does not mean that there is an order block around this region. They might actually be creating some sort of liquidity around this region to trick buyers or to trick early sellers that they actually want to sell. But where they actually want to sell is actually where they created the mitigation block, right? Then they created this mitigation block. Which was the last bullish candle before this drop, and taking out liquidity around here before they dropped further below, right? So this is how a mitigation block is actually formed, right? First thing you want to understand is the trend. That's the first thing. The first criteria for a mitigation block to be formed is that you actually want to understand the trend. What is the trend in the market? Is it an uptrend? Is it a downtrend, right? If those two criteria are, or if that particular criteria is not being met, then the market might actually be ranging. The second thing you want to see is structure, right? You want to understand structure. What is the structure of the market, right? If the structure is not giving you a clear higher high and higher low, or if the structure is not giving you a lower high or a lower low, then that particular the criteria to form the mitigation block will not be met, right? Because trend is not clear, structure is not clear. We need these two things to be clear. We need structure to be clear. We need the trend to be clear. The second thing you want to see, or the third thing you want to see a failed high, a failed higher high, not or a failed higher high being formed, right? You actually want to see a failed higher high being formed, meaning you don't want to see price breaking this high. If price breaks this particular high, that particular formation for a mitigation block is invalid. You want to see a failed high, or if you want to see a failed high, right? Or you want to see a failed low. Until the high is failed or the low is failed, you will not see, or it will not be a very good mitigation block, right? First thing you want to see is trend. Second thing you want to see is structure. The third thing you want to see is the failed high or a failed low. The fourth thing you actually want to consider is momentum. Once you see this kind of momentum, and you also see a failed high, right? Once you see this kind of momentum, right? You see this kind of momentum and you actually see a failed high also, then you can actually say that the fourth thing, or you can actually say that the mitigation block is actually forming
very, very well, right? Then the fifth thing you actually want to see, you want to observe your mitigation block, right? Now, the mitigation block is the last bullish candle before the drop, right? The last bullish candle before this momentum, right? Once all those four those four criteria has been met, you now want to observe your mitigation block. Your mitigation block is the last bullish candle before this drop, right? The last bullish candle before this drop is your mitigation block, right? So let's go to the chart and let's explain this particular thing. Let's explain this thing further on the chart, right? Let's explain this clearly on the chart. Let me use this, right? So this is GBP JPY chart, but I think I actually saw so I actually labeled this particular one, right? I actually labeled this particular one. This is a 5-minute chart, right? This is a downtrend using a 5-minute chart. On the USD card, we can actually see that trend is actually clear, right? We can see the lower highs and lower lows being formed, right? We saw this particular low being formed. This low was formed. This low was formed. This low was formed. This low was formed. This high was formed. So we actually see that the trend actually was clear on the 15 minutes, right? Now, I now went back to the 5 minutes, and all I want to do is I actually want to be a seller on USD card. Although I bought and I was stopped out today on USD card, right? I actually was stopped out on my trade today, right? So when I went back to my 5 minutes, I started seeing traces of mitigation trying to form, right? Now you can actually see what they did. They formed an equal low. Remember that I've actually I've thought about equal highs and equal lows, right? Equal highs and equal lows are actually liquidity in the market. This is where the big money resides, right? Equal highs and equal lows are actually liquidity in the market. Anytime I see equal highs and equal low, I mark it as X because this is where the big money lies, right? So we can actually see that they started creating a high, right? They created this high and they created this high. Now they formed this high. Now you can actually see that they've actually formed this high, but they refuse to break this high. You can actually see that price refused to go back higher. Remember that USD card is a sell. Remember that the trend is a sell. So all I want to be doing is I want to be a seller on this trade. I actually want to be a seller on this particular trade, right? You can actually see that price was giving a series of higher highs and higher lows. This is the high, this is the low, this is the high, this is the low. Now, price refused to break this high. Instead, price broke this low. Now, like I said, you want to see clear trend. You want to see clear trend. Now, this particular thing, what you see is a trend reversal on the 5 minutes. Like I said when I was explaining that a mitigation is like a mitigation block, or a formation of a mitigation block is just like a trend reversal. You actually want to be seeing a trend reversal on when a mitigation block is formed. Remember, all I actually have in my mind is a sell. I want to sell, right? Now you can see that price broke this low. Now this was a clear confirmation that once price comes back to this mitigation block, I will be looking for a sell. I didn't sell this trade. If not, this would have been a very good trade, right? This would have been a very good 80 pips trade, but I didn't sell it, right? So we can actually see that they failed to break this high, which we were actually expecting because we are in a downtrend. They failed to break this high. Once they failed to break this high, they cleared this low with this good momentum here. The first thing, like I told you, you want to understand trend. Second thing, like I told you, you want to understand structure. The third thing that you want to see, you actually want to see a failed higher high being formed for a move back to the downside, right? A failed higher high being formed for a move back to the downside, right? Which we can see actually here. The higher high was failed around this region, right? The higher high was failed around this region. Now you can see that price failed it price failed it, formed a mitigation block. Like I said, the mitigation block is the last bullish candle before this drop. This was the last bullish candle before this drop. Then price came back, tapped it with a zero drawdown, tapped it and moved below, right? So this is how a mitigation block is actually formed. Let's see if we can see a mitigation block on an uptrend, right? So let's go to, right? So let's go to USD right? Let's go to USD. Let's see if we can see. Let me see if we can see another chart on Euro GBP. Okay. Right, perfect. Now you can actually see. Now, remember, Euro GBP is actually in a downtrend. So all I want to be doing on Euro GBP is sales, right? Now, if you go back to your 1 hour, right? Let me zoom this a little, right? If you go back to your 1 hour, let me use okay. Now let me use this 1 hour as an example, right? Now you can actually see that we already know that the trend for the Euro GBP is a downtrend from the daily, right? You can actually see the lower lows being formed, lower highs. You can actually see lower highs. You can see sorry, lower lows, lower highs, lower lows, right? Lower high. Now you can actually see where price fell from, right? I actually had this trade marked out, but I didn't take it. I actually had this trade marked out that I want to actually be a seller around this region, but I didn't take it, right? So now, if you look very closely, you can see that although mitigation was actually formed, but mitigation was not filled. Now, if you look very closely, we are actually in a supply region, which is this region here, right? Now, price was, like I actually said, that you actually want to see a clear, if you want to understand supply and demand, you can actually look for my previous videos that I've actually made on my playlist, right? So I actually explained when a proper supply and a proper demand, what you need to see, right? Now, they formed a double top. Now, look at what they actually did. They formed a double top. Like I actually told you, you want to see double tops as liquidity in the market. You want to see them as liquidity, as a place where you want to be taking your profits, right? Now they formed a double top on this particular market. Remember that they were actually creating higher highs and higher lows, right? You can see that they were creating higher highs and higher lows on the bigger time frame, right? So this is a high, this is a high, right? This is a, sorry, this is a high, this is a low, this is a high, right? This is a high, this is a low, right? This is a low, this is a high, right? This is a high, this is a low, right? Then this is a high, right? So you can actually see that we have progressions of higher highs and higher lows. Now, if you look very closely, price formed a high on the 1 hour. Now, this is a mini 1 hour high, right? This is a mini 1 hour high. Like I said, you want to see trend. Second thing you want to see is structure, which we have seen so far. The third thing you want to see is a failed structure, a failed higher high being formed, or a failed lower low being formed. Now you can actually see that instead of price to continue this higher high, price actually broke, or instead of price to continue the uptrend, price broke the low that formed this high. Price broke the low that formed this high. This was the low. This was the low that formed the high. Price broke the low that formed the high. third criteria has been met, right? You actually want to see price breaking the low that formed the high, which I actually stated. Third criteria has been met. Now, the fourth criteria you want to see is you want to see a clear move to the downside, right? Now, this particular move was a clear, if you go back to the 1 hour, or if you go back to this move wasn't really clear. It wasn't really clear, but you can actually see that mitigation was formed. Now, the last bullish candle here, the last bullish candle here is actually the mitigation block. The last bullish candle here, right, is actually the mitigation block. Although it has not been filled yet, right? You can actually see that price is keeping this region. So if price comes back up here, I'll be looking for selling opportunities to actually go lower, right? So this is how mitigations are being formed. The reverse for this one, for an uptrend, is the same thing for a downtrend, right? The reverse is for a downtrend. So this is basically how mitigation are being formed, and this is just a sneak peek of what my mentorship is all about, right? So if you enjoyed this video and if you want to see more of these videos, if you enjoyed these videos and you want to see more of these videos, please do well to subscribe. Please do well to turn on your notification buttons. Please do well to comment. Tell me if you liked the video. Tell me if you enjoyed what you actually saw when as I'm actually on the content which I actually released. Tell me if you enjoyed it, and don't forget, if you want to join my mentorship and if you also want to join my free Telegram group, the link will be in the description below. Cheers and God bless.